movement. And I'll go over some shopper activity, which I've always done. Um, and I'll also show you some adjustments that are happening in the market and some warnings here. So, just over the weekend, watching some ball games and stuff, noticed that Nissan has 0% for 60 months on new vehicles. Hyundai came out with 0% on new vehicles. Again, Nissan came out with 0% on new vehicles. And so the incentives are coming. And that was kind of my warning months ago. I'm like, all right, here's what's going to happen, especially with these tariffs. If they start hitting, discounts are going to come. And so with 0%, which is a big deal right now because interest rates really still haven't dropped. And so that's a big offer. Was on a call with a dealer earlier. They said that, man, off the top of my head, the brand had 0% for 72 months. So these incentives are coming, which are going to drive more used car trade-ins. Okay. And what was weird today on some of these calls, these were cheap. Some of these cars were cheap cars, $14,000, $13,000 cars where the market's moved, and it's moved pretty quick. And so typically what we have, and I'm going to show you my screen. Let's do this here. And let me do this here. So if you're listening to this on podcast, go join it on YouTube or my Facebook or anything. We'll take a deeper look at this right here. So, looking at last year's sale rates by our dealers, we typically get, and here, let's go back 2 years even. Forget pre-COVID stuff or post-COVID stuff too. But July 4th, this is our dealers' 2-week sold percentage. They'd sell in the mid 40s, 44, 45, 46%. And that's a 2-week sale rate. And so what I mean by that, like right here, July 18th, the 44% sale rate means they were selling 44% in 2 weeks. So they were basically selling 88%, close to 90% of their inventory a month. So if they had 100 cars selling 80 to 90, okay, 88 to 90 cars a month. And then right after the July 4th ended, and July 25th here jumped up to 48%, and by August 1st, 49%. So almost selling 100% of their inventory. And the reason why I bring up July 25th, what we're looking at here is a 2-week sale rate. So that goes from July 11th to July 25th. Okay, so today's the 14th. So they saw a good uptick, and it ran through September 5th, and then by September 19th, it dropped down to 42%. So again, roll back 2 weeks. So by September 2nd, things started dropping off. So you pretty much have second half of July and August were good sale rates where they're basically selling about 100% of their inventory. And then it just stays flat rolling through December and everything. Tax season hits, that's this spike here in 2024. And then again, it dropped down through July 9th. And then look what happened last year. By July 23rd, it was at 50%. Same pattern, right? Go 14 days back. Okay, so that would have been around what, the 10th, 11th, 12th range. You're running into, or 14th range, 714 to go. No, 2 weeks back, minus 40 would put you around the 5th and stuff. All right, so right after July 4th, things started picking up. Dealers are selling 50% of their inventory pretty much again through all of August, and then by September 17th, it drops down to 41%. Go 14 days back, that was September 3rd. Okay, things started dropping off. See a pattern there? 2 years in a row. By the first month of September, it drops off. So if we look at what's happening now, we got a little bit of an uptick July 1st. July 8th was 43%. As matter of fact, I can show you to July 11th right here. July 14th, we're at 43%. Okay. So maybe here, hopefully we get an uptick in used cars. Now, there is an uptick in used car shoppers. Okay. And this is a 5-year pattern. So used car shoppers are upticking from 52 to now 60. But let's look at the last 12 months. Okay. This time last year on a scale of 100 was at 87, and now it is at 100. So right now we've peaked. This is even better than March sale rates, okay, our March shopper activity. That's tax season. So what we're saying is there's more used car shoppers right now than there was in that March tax season. Tax season really wasn't that strong comparably year over year. Again, if you want to see that, if I go back into this tax season, our dealers peaked at a sale rate of 55%. Last year, they 56. So it was about the same. So hopefully we get this little surge of used cars. But I think what's happening too, we probably will get it, because here I want to show you a car real quick. What we meant by the market's moving fast. So on this date, this vehicle, and it happened to be an 18 Toyota Avalon, okay, decent car at 23 grand. Well, on 7/7, 23 grand was 97%. Okay. That was just a week ago. And now that price jumped up to 100%. So the market moved 3%. And car after car in this dealer's inventory call, and I'm going to get off of this. I mean, 9 out of 10 cars moved 1 to 3%. The market moved 1 to 3%. So, our really big focus was any cars that they haven't adjusted in the past 7 days is reevaluate these cars, because that 97 jumped to 100. So then they dropped the price basically $500 to 22.5, and that put them at 98%. Okay, so that just kind of put them back to where they were a week ago. So as the market's dropping their pricing because cars were sitting, because again, it's been slow, but it picks up right after 4th of July. And so we're just getting back to where we were then. So dropping the price, shopper activity's up, our sales should start picking up, right? But we're also going to run in some new car business, which will drive trade-ins. Okay. So really and so what I'm telling you to do right now is, because in the header, used car market has moved fast. Now what? Again, 1 week, 3% drop. And again, car after car after car. Go check your market, go check your pricing history and see what happened. And so now what do you do about it? Well, again, we should be able to hold out, have some pretty good adjust to the market. You should then be able to have a pretty good sales volume kick in because the prices are lower. Anybody shopping starts biting. Problem is, too, you're going to hopefully get some new car business with this incentives that will drive some trade-ins. Okay. But here's what we're going to happen. It's going to be a false positive at the lane, right? So if volume starts going up, we get some trade-ins coming in, wholesale's dropping, but then we're going to have to replenish some of these sales. So we're going to go back to the lane by mid-August, and the end of August going into September. We're going to go back to the lane, start buying cars, and wholesale is going to go up going into September. And it seems like things are great. And we're in September buying up cars because we had a strong August, and we're overpaying for cars. And then by October, we're stuck again. So anticipate that that's going to happen. And if new cars incentives stay strong, and this arm twisting of the current administration to the Federal Reserve to drop their rates, there's a lot of stuff going on there. This administration's putting some pressure on the Federal Reserve. And if they lower rates, again, more manufacturers are going to jump on the 0%, 60, 72 months financing. Now, that dealer happened to buy those rates down, matter of fact, but you're going to find that new car will get the attention, which typically happens July, August. Usually it's summer sales events, Toyota Sell-a-thon, lease programs and things like that. So tend to drive some trade-ins, some good used car market or new car market, driving trade-ins. Used cars should pick up a bit. Problem is there's not good quality used cars out there. And let me share my screen one more time with you, because I want to touch on that. I want to touch on, and let me get it pulled up here before we do. I am going to hide this dealer. All right, I'm going to share this screen. Market view. We track, again, new and used car listings. If we go back a year ago, Auto Trader had 1.4 used cars listed on their website and 1.18 used cars on cars.com. It is now 1.49, almost 1.5. So you're talking 1.42 to 1.49 It was at 9.9 just last week. Okay. And 1.22. So again, cars.com, 1.186, 186 to 228. So basically, my point being is there are more used cars listed right now. Active shopper counts up. Hopefully, it pulls people in the market, but we got these new car incentives that could drive some trade ins and new car activity. So we should have a strong next 45 days. But watch out for the beginning of September. And think about this too. The only way September and October stay strong is if the rates go down and people get in decent trade-ins are coming in those 3-year-old cars with decent miles, 3-4-year-old cars that people been buried in but can get out with the 0%. Those start showing up. Then used cars could stay strong in September and October, but I doubt that's going to happen too much. And I think you're going to end up. Basically, what I'm saying is that 1-day-old car is going to be 60 days old mid-September, and you don't want to be stuck with that car at that point in time, probably. So always, the best strategy, stay lean and clean. Sell 100% of your inventory. Do 60 to 70% of your sales in the first 30 days. That's what our tool and product and services are there to help you find those gaps. No matter how your inventory is sitting, we'll be able to find any holes you're having, guaranteed. I don't care if you're selling 130% of your inventory every month. I will find 5 to 10 holes in your process and inventory and another dozens of holes in your lead follow-up with that, because we'll combine inventory data from your inventory tool with your CRM. And I guarantee you, we're going to find those holes to keep you ahead of the game. If you're only selling 50, 60, 70% of your inventory, guarantee at least a 25% increase in volume, if not 100% of your inventory volume within 60 to 90 days. So check out lotwalk.com, see how we can help you. Hope this is helpful for you, and have a strong week.